I haven't had enough fun today yet, man. You can't go.
Well,
All
that's why you have
right,
Ben here.
You'll have it with
Ben.
Ben.
Yeah.
Ben's gonna bum us all out with the end of the world kind of stuff. Aren't you, Ben? Come on, let us know before you come on. Are you?
I think you said it, Dale. It's a coin flip right now.
All right, good. There's my buddy. All right, well, thanks, Blake and Steve and Kay. Good show. And Ben, great to have you back. Happy New Year a month and a half later.
Yeah, Happy New Year to you and the gang.
Hey, buddy. So, you know, huge deal. We haven't talked really except by text, via text of, the red wave. And I was wondering how this fit in with your Epoch cycle when this event happened. And if it validates it, accelerates it, um, does this have any where we could get maybe a detour from what you were thinking about prior to this election, or it reinforces it more than ever?
Yeah, I think it's a great question, and it's a perfect manifestation of this epic cycle, right? Because you have this agent for essentially tearing down
Yeah,
the existing structure and starting over and saying we need something new. This is not working. I mean, you couldn't have scripted it any better than what the epic cycle says. And for people that haven't heard, what we're going to do today is we're going to run through, because there's a big convergence of cycles right now, Dale. And I think it being aware of this helps in your decision making, helps in your evaluations of, do I take risk? Do I not take risk? What kind of risk
right.
do I take? So we're going to review those. And the key thing to think about is when you have convergence of cycles like this, that sets the stage for huge changes. And we've already seen it with Trump, not only, through the executive orders, but the stuff like Doge. I mean, the
Yeah,
revelations there are, it's certainly creating a crisis for some people. And the whole
yeah,
thing with
it
crisis
is.
is crisis creates change. So we're sort of moving downhill in this process, and it's moving really rapidly. And as I said before, when we were coming into this, the best thing to do is don't react to it. Just sit back and watch. Just sit back and watch, and then think clearly about, okay, what's the best thing for me and my family, and how do we position for the new thing that's coming, because it's coming. I mean, I don't think there's any doubt now that massive changes are happening. People could have hoped for the status quo. I think the election just basically sealed it. No
Blew it
status
out.
quo. Yeah, no
Yeah.
status quo. It's done.
So
It's
I'm looking at your cycles here, and you have real estate and panic and GAN.
Mhm.
And in this kind of geo atmosphere, um, I was wondering if there's something coming up here in 2025 in your war cycles, because I've been reading a lot about some planetary work and what zone we're on by this Indian author that
Mhm.
was expected. Where we're at in his cycles is the same as where we were at in World War II.
Yeah, I don't disagree with that. I mean, the atmosphere is ripe for conflict, because the main thing about the epic cycle is you're moving from this sort of big global, massive sort of organizing structure, like, things like the UN, things like NATO, and people are saying, you know what, that
Yeah,
doesn't serve our needs
that's
anymore.
right.
We're just concerned about us. We're going to take care of us, and that's going to lead to conflict, right? Because my interest may not be my allies' interest anymore,
Right.
and we're
It's
seeing that play out.
our adversaries' interests and ours are the same.
It can happen, right? And those alliances are going to change, and things are going to move. It's not going to be this sort of,
Yeah.
pick your side and stay there.
Yeah.
So let's see. Let's
All
let's
right.
get
Yeah.
into these things. So
I'm
for
ready.
people that don't know, the epic cycle is a 400-year cycle. I call it the real great reset, because we're at the end of one and transitioning into the next. The loss of trust and faith is something that I've spoken about for the last 2, 3 years with you, Dale. How people were just losing trust and belief in the systems and the institutions. That's done. There is no trust in that anymore. The current phase is where we actually, take the systems down and there's failure. And that's why I think, Trump is the agent for that, and Doge is a perfect, byproduct of that. They're exposing how corrupt and how inefficient and how sort of, you know, uh, poor stewards the current structure is for our tax dollars and for organizing society. So it's going to lead to major, major changes. I think people are feeling the fact that, this agreement between the government and the people, we give you taxes, you give us these services, and we have this arrangement. That's over because people realize that they're not getting the services. I mean, look at
So
the
are people going to become tax rebels now?
It might. I mean, already I think there was papers filed by some politician in California to have California leave secede the union. I mean, you're going to see all these kinds of
Yeah,
things where people say, our interests are no longer served by being a part of this big thing. We want to do our
yeah,
own smaller thing.
yeah.
So it really is every man, every country for himself now, because we're looking at a multipolar world. And just look at the headlines every day and you'll see examples of that.
So we go to every man is an island instead of no man is an island.
I think that's right. And the main thing to understand when you're thinking,
As long as I'm on an island,
all right, with
all
good
right, buddy,
weather and not in the way of hurricanes.
and away from the social unrest that is slowly starting to see it already. Only a month in, people around the streets already.
Yep. That's going to get worse too. So the
Go ahead.
I think the new epic, to the way to think of it, right? Something's ending, something's beginning. It's not the end of the world. It's just the end of the world as we know it, and it's going to be different. So it's not going to be with large centralized institutions. It's going to be smaller, decentralized system, more focus on the individual. I mean, you're already seeing it in the sort of the change in the tenor of people's beliefs and what they can talk about and what they can support. All that's changing, and it's changing hopefully for the better, and we'll see. Um,
Yeah,
it's an evolutionary process. Things like Doge are going to continue to happen, and that's the things, the markers that you're looking for. So if you're thinking, how does it affect my investments? Well, big defense contractors may not be the greatest place to be, maybe smaller ones. Things that are dependent on the government, maybe not the greatest businesses. You were talking about Palantir. They're the government contract kings, maybe not a great place to be. That you got to start thinking, what are the secondary and tertiary effects of these changes? This is one that I think is really important because it's coming, it's here. It's an approximate 20-year cycle where we have, a big move up after a 3 to 4 year decline. So it's like a 16, 17-year run after a 3 to 4 year decline. The top of the cycle happened in January, and it's 3 to 4 years on average that we're going to see this. And it doesn't have to crash like the last one, but where it's going to be softness, and there's going to be, recessions. There's going to be banking and credit stress because, it's a highly levered asset. And one of the things that you look at and say, okay, you can't just blindly follow a cycle. You have to say, is price confirming? What is price saying about the cycle? And I want to
well,
review the home
okay.
builders with you and see that.
All right. Well,
This is a
I know they've been ugly. Been
Yeah,
talking about them for a while, but
yeah.
the financials have been the strength in the market, and now they're beginning. I have three drives to top formations everywhere in the financials now.
I think that when you were pointing out JP Morgan and the banks, I said that is really smart because, again, real estate is highly levered. Banks are going to be affected. If we have, a 10, 20% pullback, 30% pullback in housing prices, there's going to be issues for banks and with credit. I put this tweet out almost 2.5 years ago, and the cycles pointed to January of 2025 for the high end real estate. And we're starting to see evidence that this
Yeah,
time frame is right. So it's
yeah,
not something that, you know, you you do flippantly. It's a regular cycle. It's
Hey,
approximately
you
20
know,
years.
I use an 8 ball.
The magic 8 ball. That was the best, right?
Probably happened. I forgot their answers, but they all work. So
Yeah, and
anyway,
they were generic enough to work for any question. But we spent hours with it, didn't we?
it's like a CNBC interview.
Right. Right.
You should be long unless it fails, and then get out unless it comes back and rallies again.
Yep. So
So
for housing,
yeah,
here's the data, right?
yeah,
Housing units started
yeah,
down
yeah,
dramatically. Housing permits flat. I mean, this is how you transition from a market that's rising to a market that starts correcting. And so the data is starting to support that now. And then look at the home builders. You know,
Melody thinks it's going to be uh, the financial crisis, the housing crisis back then, which was a financial crisis. It's going to be like 2.0 on steroids.
I mean, it's
She thinks it's going
possible.
to be worse than 08, 09.
Obviously, it's all related to the leverage and then people's ability to service the debt. So
Yeah,
if we wipe out a bunch of jobs because of a recession, you could
yeah.
absolutely see that.
Okay,
Here on
so
this is the home builders and S&P home builders on a weekly basis.
yeah,
Those two white arrows were both false breaks. We made a slightly higher high there, and on the
yeah,
second one we made like a one tick higher high and then reversed hard.
yeah.
So, you know, price action in the home builders is telling you, okay, there's issues coming up in the housing market. And so keep watching them to see if the cycle confirms. Again,
Looks
it's a
like I hadn't shown one more pop would kind of put in the right shoulder.
yeah, that could be. And then the neckline down here gets broken and
Yeah,
then you got trouble.
right, right.
So they're rolling over, fits with the timing of the cycle. That's another thing we add to the mix, right? So you got the Epoch cycle, which is a huge 400-year cycle. This is a 20-year cycle. It's just adding to stress, right? Potential stress. Let's go to the Rebel Yell cycle.
I feel stress.
I introduced this to you, I think, in the last podcast. It's like a swing trading cycle that it's based on patterns in price and time that we discovered. Um, the signals last 2 to 12 weeks in duration, depending, upon, what fires up. And it's pretty good at identifying turning points in the market. The next hit is next week on the 25th. So it's interesting timing that we're churning at the highs as we're getting this next hit coming. So that's something I want
And this
people to.
is for S&Ps. That
Yeah,
they're
this
your
is S and
yeah,
P's and risk. These white vertical lines are hits that we've had in the past on this cycle. They're not
yeah,
all 100%, but I mean some of them are like spot on, like that low, that high, this high.
yeah. That was a good
That
one.
was the July high in
Yeah,
2024. So they're real good to watch. You got to watch price action coming in and out, but it does give you a marker to say, okay, has something changed? If we were going sideways into it, what's happened when we come out of it? If we were rising sharply into it, did we
yeah.
accelerate or did we now correct or we go sideways? It gives you a good gauge of change in energy. Here's a couple recent ones. The December one was nice, gave us a decent move because this here was the change in the contract, if you remember, because this is a continuous contract. So the December one gave us a nice leg down there.
Yeah, that these bear rate something I warned about
Yep,
because
exactly.
it was going to be thin and everyone thought they were okay till the beginning of next year.
Yeah,
And
everyone was looking for the Santa Claus rally, and it was
yeah,
the opposite.
yeah,
So the next
yeah.
one's here is on the 25th next
Tony,
week.
let me write it down. What day is that, Ben?
I think
Tuesday?
that's Tuesday. Yeah, Tuesday.
Oh, what a turnaround Tuesday coming up.
Yeah. And look, so we've been doing this garbage going sideways into it, up,
Yeah,
down, going
yeah.
nowhere. Hopefully maybe that changes the energy and we get a real move out of it. But we'll be
It
watching
looks
that.
like looks like a little bit of a breakout. And to me, if we take out Monday's low, no,
Yeah,
well, it
that's
was
trouble.
yesterday's low.
Yeah, that's
Um,
trouble.
yeah, 6,100,
Yep.
right?
All right, let's look at the panic cycle because this is one that doesn't come up very often, but when it does, you got to watch it. So It doesn't guarantee there's going to be a panic. What it does is it tells you time periods where there's an increased chance of a panic happening. It's related to the business cycle and human emotions and historical panics that have come from this cycle. There's a list of them. I mean, there's some going back where I can't even get charts for them, but 1837, 1857, 1893, World War I, Great Depression. The one that I want you to focus on is the stagflation panic, because I think that's the one we're closest to right now, is the one in 68, 69. The 87 crash caught it, and the last big recession in 2007. This was there. We're in that window now. Again, it doesn't mean we're going to crash. It doesn't mean it has to happen. It just means the odds of it happening are higher than normal.
How big of a window is it?
It's generally about 3 to 6 months. We
And
start
when?
we opened up like in early to mid December. So
Okay.
I think you can look into the spring.
Okay. So six, and that should be. Uh, it could be the big huge move to the downside because
It
it's a
could.
panic, right?
It could be, yeah, it could be a panic. I have no idea what the cause would be. I'm not even
Okay.
speculating on what it be, but it's possible. Could it be, revelations through this Doge effort and things that they're doing and how they're upsetting, the current power structures? Maybe. Could it be a pushback from the other side? Maybe. Could it be financial? Maybe. Could it be war related? Possibly.
Yeah.
I mean,
I
there's a
think
lot of stuff.
it's going to be because of this presentation.
To have such influence, right?
Yeah. All right, we got a lot of fun things happening here. We got peaks, we got panics.
So here's
Yeah,
the S&P from 68 to 70. I think
yeah,
this is the path we're potentially on. But as you could see, it's a little different, right? We made a high after the election in 68, came down, lower high. We're not making lower highs right now. We're actually poking through and making a higher high.
right,
So you got to be open to the fact that yes, all these cycles are here. But if we get above the highs and settle above these highs, and I'll show you the levels, it's going to go. It's going to go another 300-400 points in the S&P.
right,
And you can't
64.
and you can't be stupidly short because all you're going to be doing is giving money away. Right? So you
So,
have to pay attention to the technicals, you have to pay attention to the levels, knowing that these things are out there is just so if we do see things and the technicals start shaping up, you're not blindsided. You know what's potentially coming.
okay.
So that
Is what do you make of this action? We had a breakout at the end of last week, right? And
mhm.
then we had Monday off, and so far we've done nothing
it
after a breakout.
I think like you said and like Blake said, and we'll look at the charts. If we don't get up and get on top of these previous highs and stay there and then start moving, it's a false
Yeah,
break. And you got to watch out because with
yeah,
false breaks, with these cycles around, that could be a sharp move lower.
okay,
Let's talk about the Gann cycles. Gann has some key numbers, 90 and 144, and their derivatives are the keys. Major markets and leading stocks in those markets are showing completions in time. And what I mean by that is they're showing 90s and 144s on weeklies and monthlies. These are not like 5 minute cycles, 60-minute cycles, even 4 hour or daily. These are big, long cycles. So there's significant markers saying that there's some big moves have ended. It doesn't tell you what comes next. It just says, hey, something ended, something new is starting. It's our job to look at the technicals and to look at, what's happening in the markets to say, all right, what is most likely to come next? And truthfully, Dale, when you were talking about coin toss and K-Man was talking about, waiting in the waiting room, that's exactly where we are in a lot of these markets, in risk, in bonds, in the dollar. It's all on a bigger time frame. It's all a question right now of which way are we going to go?
yeah,
Right? And until
yeah,
we get the evidence, we can't commit to big, sort of long-term position trades. You got to be a scalper, you got to be a day trader. And that's what I've been doing since December, since we got that downdraft, is just kind of picking things really short term because the long term is really it's sitting on the razor's edge which way we're going to go. And one of the things I want to encourage people to do that are interested in these times, we did a video where we went into specific stocks, Palantir being one, Amazon, Microsoft, Google, Meta, Nvidia, all these big bellwether stocks, and you see that almost all of them are hitting major long-term timing cycles where there's 90 months, 144 months, 270-month cycles, 288-month cycles, things that you got to pay attention to because they're telling you that this particular move is over, something new is coming. And we're trying to decipher what that is next. So if you're interested, spend some time, go check out that video and you'll see because it's a 45-minute video and we could spend hours talking about that. Let's
Okay.
talk about the Epoch Cycle plays. For the last couple of years, we've talked about three main ways to express this cycle. They've done very, very well. Especially, they were kind of flat and dead for a while, but in the last year, we've really seen a good move in them, and they continue to be ways to play this sort of chaos and the transition to a new system because each one of these things sort of benefits from decentralized or uncertainty or sort of this concern about the old system versus what's coming. Let's first look at gold. Right now, the key numbers in gold are this 2667 is your support. That's the half square. You can see here this dotted line. And right now we're pushing up towards 3150, which is a full square. As long as we are above this 2667, 3150 is the magnet. Bigger cycles, like a 144 from the low here in 2016 takes us out into, late 27, early 2028. So it's possible that could be the run, the full bull run in gold, with corrections and, pullbacks and such in the meanwhile. But it looks
Would you
good.
say that at your target above 3,000, that gold might be vulnerable for exactly what you just said? A pretty good correction, like maybe even 2,500 or so.
It's possible, Dale, but if we get above, I mean, the way these squares work, they sort of they map and control price, but once you get out of on top of a square, so let's say
Right.
we get up and sit on top of 3150 and can't get below that, it opens up a whole new square where
Okay, I
where we're
got it.
then looking at 4,000s, in the
Okay.
4,000s.
So each square is about 1,000.
Yeah, in this particular case, yeah. And the
Okay.
half square is about 600. So
Okay.
the
Great
the
call.
we gotta watch that and see, how does it act at these, these cardinal points, because that tells you, okay, where are the odds flipped once we get to the edge of the square.
Because there are a lot of people that think, and if you're right about the stock market, that, we're going to have a deflationary period before the, Fed really brings out the bazookas, and that's when we have really inflation out of control
And that,
because the
that makes sense,
economy's
Dale.
failing.
It
Yeah.
makes sense because think about it. If things are, if there's panic and people are selling stuff, they're going to sell their gold, they're going to sell their silver to create liquidity. They're just going to scramble for liquidity.
Yeah.
I mean,
Or
silver's
kitchen
a
sink.
yeah, silver's a
Right.
good example of one we talked about, and you
Yeah.
said, you know, it's right here. It's kind of uncertain which way we're going to go. Right, we could
It
go down
is.
and test this 2666 area,
Yeah.
or if we get legs, get up over 37, 38 area.
Yeah. I could see both of them.
And both
Silver's
of them are
taking
still
its time
bullish,
though.
right? They're
Yeah,
bullish, right?
you're
Oh,
right. Even if we got a pullback, it's bullish.
right. And if we do
Yeah.
90-month cycle from the low in 2020, takes us out into middle to late 27, the cycle would complete a 90 there.
$200 silver.
It's possible, but first we got to get over 38, then we got to get over 49. It's like
I know, I
stair
know,
step it up.
I know. I just wanted two or three more clicks on the interview. That's
Yeah.
all. All right, go ahead.
Here's Bitcoin. Bitcoin's an interesting one, right?
It's
We
kind of,
we
yeah. What
we
do you
broke
think
out and everyone's getting frustrated, just like they were frustrated
with
here,
gold?
right?
Yeah,
And with gold too.
yeah,
But this, as long as we're consolidating up here, it's not bearish,
right.
right?
It is.
I mean, we could pull all the way back to 74, 75,000, and it's still not bearish on a monthly basis. The
Yep.
level to watch is for the monthly is this 93,000. As long as we stay above that, we can push up to this, 111, 112 area. If we
Yeah.
get below that, then it looks more like we're going to, head back to 74, 75.
Yeah. Buy point.
Yeah,
Yeah.
but this is not bearish.
Everything you're long uh, is only vulnerable to corrections, not trend reversals.
Not on the big picture, right? Not on the big
Okay.
picture. Everybody
All
has
right.
different time frames, so you got to understand that this is big picture stuff. All right, look, what are the opportunities? It's funny when I heard you guys talking, you and K-Man and Blake, I said, man, this is like they were setting me up. Buy or sell risk. It's a question. Buy or sell the US dollar. It's a question.
Yeah.
Buy or sell bonds. It's still a question.
Yeah.
Now, I'm definitive on buying hard assets. I'm definitive on buying the grain. So let's get into these things and then we'll go over each one.
Okay.
All right, here's your ES, right? ES weekly. This square is set from the COVID lows in 2020. The things to notice: it completed a huge ABCD at the high. We also completed an ABCD from the 2023 lows at the high, and we're not pushing through it yet. And the reason why is we have this half square at 6150. We need to get above it and clear it, meaning get above it, stay on top of it. If we do, 6500's next. If we
Okay.
don't, then we start down, right? The pressure will turn. So
Yeah.
this is why, yes, the cycles are ominous, they're big, they're going to come to fruition, but maybe the market has one last run left in it, right? And gets us up to 64, 6500. We'll
By the
know.
25th, I don't think.
No, but we'll know if we clear, get above and clear 6150, then we go. If we can't, you got to start looking to the downside.
Let me ask you, where is that vertical line, the next one that comes in from where we are? The vertical square. There,
Here,
that one. Yeah, time-wise.
it's probably April, May,
Okay.
close to
So
mid year because
so
yeah, it's
there's
about
your
halfway.
6,400 level by May if we're going to go.
It's possible.
Yeah.
But
All right.
first
That's one of them.
we got to clear these highs.
Yeah.
And the longer it takes to do it, I mean, Dale, you know sentiment, you understand stuff. If we're
I
gonna
know.
have
I'm
a
nervous.
I know, if think about this though, if we're gonna have a melt up, how often do they like let everybody get on board the train before the melt up happens?
That's what's making me nervous.
Yeah,
Yeah, because I have no puts on right
me neither. I'm flat
now. So
because the,
I'm
the
more
market's telling me
nervous.
to be flat. The technicals are saying be flat. There's no edge right now.
Yeah. Could be like an overnight event, and
It's possible,
you're gonna have to reach for it.
right?
So I always had something on, but I thought we were gonna have the breakout. We've had it, but I'm not impressed yet
No, nope,
at all.
not yet. It'll tell us. Here's the
Okay.
NQs, and the NQs are
Will you
interesting.
give me a call, man?
Yeah, absolutely.
All right.
When we see the whites of their eyes.
All right.
So the NQs is interesting in that we've made a lower high. It's almost like NQs are like silver, right? Silver hasn't made
Yeah.
that high. Gold has. So
Yeah.
we're interesting here. The key number monthly basis is this 21,100 level, right? As long
Yeah.
as we stay above that, we can push to 24. But if we get caught below, it's more likely we go to 18. So
Yeah.
again, it's not giving us a full bar above yet. It hasn't cleared it, right? You got to get a full bar. Like here, you can see this full bar was below. It failed there. And then look what we did. We came right down here. Then we got a
Yeah. It's
full bar above and shot back up. So
because the Mag 7's been weak,
yeah, so
except for Amazon. Yeah.
we got to see it clear.
Yeah. Okay.
Let's go to the grain train. Your favorites, right?
Yeah.
I think the grains bear market's over. It was 2+ years. The lows are
Yes.
in, and we're beginning to move here.
Yeah.
I don't know what the event's going to be. I don't know if it's going to be a drought or insects, pests, pesticides, whatever it
There
is.
is a new disease out there.
Right. I don't
There
know.
is. No, there is. I'm
Is there?
reporting it. Yeah,
Yeah.
so it's some type of blight. I forgot the name of it, but affecting U.S. wheat crops. So
Yes.
it's a blight. I forgot. It's like a disease. It's a
Well,
plant disease.
first the pattern, then the news, right?
Yeah,
So here's the key levels.
Yeah.
Weekly basis, 536 is below. We want to make sure we stay above that. Look how much time we spent here working on
Yeah.
this level, and then boom, we're going. Now it's
Years.
681. Now we're pushing towards.
Yeah. That's the
Then
money.
we're going to battle here. We clear there, then we could go to 825.
That's the Joseph strategy in
Yep,
action.
one step at a time.
Yeah.
Here's corn. Corn's been leading the
It
pack.
has.
You can see we pushed up out of this low, fought here for a week or so. Now we're back to 517. Big fight here, weekly basis.
Yeah. Yeah.
Get above this, you open up 621.
Dr. Scholl's in this trade. It's got corns.
Yep. All right, beans. Beans. You could see why this 1060 level is important. And not only
Yeah.
is it a half square, it was a previous high. We're battling here. Once we sit on top of that, open up 1283 next. But they all look good. They're in different stages of sort of coming out of the hole. All of them
Yeah.
look good. So find a good setup, that fits your methodology, and you can definitely trade these things long.
Yeah. Okay.
Coffee's one we had on the show the last time, so I just wanted to talk about it because it was a nice big winner, and it's kind of how it show how these squares work. The last time we were here, I mentioned coffee as one of the inflation plays to buy, and we were sitting right here at this full square, around this 280, 283 area. I said, once we clear this full square, we're going to start pushing to the higher levels. Well, here we are. We went up basically in a couple months, we went up a full square. And now the key number is this 403, which I see we're below today. So if we get
Yeah.
stuck below this, we squared out, a lot like those big tech stocks I was talking about in indices. Coffee squared out on some big time frames. So this may be the high. And what it'll tell us is if we get stuck below 403 and can't get back above, that the high will be in coffee. But this is the kind of moves you get, when you see these inflationary things and you have a
Look how
problem with
long term
supply.
that a 10-year base.
Yep. And then when they go, man. So coffee was a good one.
Yeah.
Let's go to another one we talked about before,
Yeah.
Natty.
We
That
did.
also looks good.
Yeah. Yeah,
We were
it
talking
does.
about it around 295. We're sitting, a little over 415 today.
Yeah.
But because we stayed above here, we broke out of this triangle, 488 is where we're pushing towards. That's where the next battle's going to come. And you could see 488's been an area where there's been a lot of activity going back. So that's
I
going to
love
be
that your stuff prepares you for what's ahead. It prepares you for your entry and prepares you for where that entry could be targeted or run into problems, or it gets through the area. It's an add-on type of
Mhm.
thing. So one thing about your trades and doing this geometrically is that you have time to mentally prepare yourself to execute.
Yep.
It takes me a little time. I'm a bit introverted. I don't make snap decisions about.
You got to find the levels, right? And then
Yeah.
when how it acts at a level dictates the
Yeah.
trade. For
Yeah.
nat gas, if we do 90 months high to low like it did over here, you're
Yeah.
talking about mid 2027.
Yeah.
Let's
Okay.
quickly go through the other ones. The Dixie 107.46 is a key number on a monthly basis. I know we're below that now, but you can see the bars are crisscrossing it. We got to clear it like this, right? Come up to it, can't get above it, and then get stuck below. So that's what I'm watching monthly basis to see if we get an all clear one way or another, either above it or below it. Right now we're crisscrossing it. So it's garbage from a longer term perspective.
Yeah. And I don't know.
Yep. And bonds, very similar, right? If you
Yeah.
look at this weekly, I mean, we've basically been going sideways.
Yeah.
I know there's a lot of E waivers out there. You could say 1, 2, 3. This is a 4.
Yeah.
So maybe we got a 5 coming, but we got to see something clear. Either we got to clear this to the upside or this to the downside.
Yeah.
And then we could say, okay, we're moving. We're ready to
Where's
go.
your lower next box underneath the market low come in?
About 101, 102.
Okay. 102.
So that's an area to consider for a target.
That'd be
Let's
a
talk
third
about
box.
NVIDIA because they got earnings. You got a rebel yell cycle on the 25th, Dale, and you got NVIDIA earnings on the 26th. there could be some serious energy coming into the market then, right?
Yeah.
Now, the Nvidia's one we did an analysis on. This is the kind of thing you'll see on that video if you go check it out for different stocks. Key number 140, right? That's this full square right here. If we get up above it and can stay above it on a weekly basis, we go to 162. If we can't,
That's what I'm looking for.
if we get stuck under it, you're talking 117, 118. So
I
that's the
think
number to watch.
we'll go to 60.
Yeah,
We
162 is certainly possible.
and
And that would
60 underneath after 160.
yeah, that's possible too.
You know,
If we get stuck under,
yeah, it looks like wave guys called that pullback was 4. That happened on that panic of deep sea.
So
And
maybe they
now,
have another shot up. Maybe
yeah,
there's another one more shot up.
right to your number.
Yep. Here's something to look at on the on timing here on a monthly. For GAN guys, they'll recognize this. So if you go from the 2019 low,
My God.
the high 144 in price, 72 in time.
Wow.
And this is again, this is monthly. This is 72 months, not 72 5-minute bars.
Yeah.
72 months. That's a real time frame. So again, does it mean the high's in? No. Does it mean you got to be aware of that? Yes. And now we watch price, and price helps us. We go down to the lower time frames, weekly, dailies, and say, okay, is price failing at important spots? Is it making lower lows and lower highs? And that gives you the clue that okay, big turn here. Or it could just be a pause. It could be okay, maybe the vertical stuff is over, and we do this bouncing up and down crap.
Well, Ben, I want to thank you for preparing this presentation for me.
I'm glad.
Really.
I'm
I
glad you
mean,
liked it.
it gave me some stuff to really consider, and you do every time. But it's interesting you brought NVIDIA out there because, I trade it. So,
I mean, and so many people are aware of it, Dale, and watch it, and it's a bellwether that you got to be aware of what's it doing, what's it likely to do, where
yeah.
are we, how did we get here? I mean, that's a really important part of our process is
Uh,
where are we, how did we get here?
Eventually, I think NVIDIA leads a crash and will be blamed for the cause of the crash. So we'll see.
I mean,
Uh,
it could manifest starting next week. We'll see.
yeah,
Or it could lead us to the top, right? And put in
yeah,
the blow off if they just crush it and everyone gets excited. That
yeah.
could be the catalyst that breaks us out and takes us to
And
these terminal numbers.
and I think you said the next vertical time frame after the 25th was April,
Hmm.
right?
I'll
Okay.
get back to you on that, but yeah, I think it's roughly around April,
I've
May.
heard things about April this year by some guys that are looking for a growth scare in April. So
Maybe.
anyway, let me know, man, and don't forget you have to call me. And
Ye-
everyone that hears this, either live or recorded, needs to go to Benn's YouTube channel and listen to the work of him and his partner.
Yeah, it's good stuff, man. It'll help you sort of get an idea of where things are.
Yeah, Benn's going viral, and he'll be over his cold in a few days. Hey, Ben, you ever hear this?
What's
I know
that?
you've heard the first part that money can't buy you happiness, but for sure, happiness cannot buy you money.
There you go. I've never heard that. I like that though.
Go and try, go to the bank and say, I'll put some of my happiness up for collateral.
Yeah.
Anyway,
What do you lend me against my happiness?
how about look at the smile?
It's
It's
off the
worth a
chart.
billion dollars. Anyway, you're the best, bro.
I
Thank
appreciate
you.
you, Dale. You and the guys do just a terrific job. I mean, like I was saying, everything a lot of the points I wanted to make, you all, because of your experience and knowledge, were pointing them out this morning. It was really, really fun to hear that.
Yeah, I think Doug Casey said, get out of Dodge. Maybe he meant Doge, but Casey's saying, you can see the signs. Why not get out of Dodge? But anyway, I'll see you on the streets.
All right, buddy. Take care.
All right, buddy. So everyone follow Ben. It's his name on X at Ben Maldonado. Go to +3 and check out those videos so you could get a handle on the time frames that, Benn's only here every 3 months or so. So stay in touch. And that's going to be a wrap. Remember, everyone, don't just count your pips, count your blessings. See you tomorrow. Good hunting today. And see everyone tomorrow to wrap the week. And I believe we're going to be doing it with Jamie at Reuters Jamie. So Jamie will be with us to talk about the Fed and other things tomorrow. So adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.